President Trump just told Walmart that the company ought to, and I'm quoting here, absorb the extra costs of the higher tariffs. This comes after Walmart announced this week that it would have to raise prices because of Trump's tariffs being too steep. Breaking news just a few moments ago, Walmart confirmed it must hike prices to offset the new tariffs. Walmart warns that tariffs will drive prices up, but is trying to avoid panic buying. Here's what you need to do instead. Walmart and Target may also lose access to some popular products in this tariff fight. Imagine walking into your local Walmart like any other day, picking up that familiar 500-gram tray of beef, only to see its price jump overnight from $9 to nearly $14. Lettuce? Up 30%. Even your morning cereal box? It's about $2 more. And before you can even process it, Walmart's famous everyday low price banner has vanished. Its flagship price campaign has been shelved to prevent sinking deeper into a $25 billion net loss projected for the second quarter of 2025. But customers' wallets are only the first casualty. Walmart just announced it's shutting 10 key distribution centers by the end of June and laying off over 50,000 employees. It's a cascading shock that threatens the entire just-in-time system that keeps American retail moving. Who's to blame? None other than the steady barrage of tariffs from President Donald Trump. Every new order from the White House turns incoming containers into ticking cost bombs. If this time bomb isn't diffused soon, the biggest retail collapse in history could hit right before the holiday shopping season. On April 2, 2025, the White House turned the Rose Garden into a trade battleground when President Trump signed Executive Order 14,257, which the media dubbed the Liberation Day tariffs. Starting at midnight on April 5th, every shipment into the United States faced a 10% baseline tariff, except for imports from Canada and Mexico. 4 days later, tit-for-tat rate hikes hit some 60 official U.S. trade partners. The harshest? China, with 145% tariffs on most exports. This triggered a cascade of order cancellations at Huner Toy Factory, one of Walmart's key suppliers, just hours after the order took effect. The factory had to cut output by up to 70% in April. Within 4 weeks, the American Toy Association reported that over 45% of its members were at risk of going bankrupt. Shenzhen Long Beach shipping rates nearly tripled despite plunging demand. Europe felt the impact too. On May 2nd, Trump threatened a flat 50% levy on all EU exports unless Brussels yielded, then extended the deadline to July 9th after a call with European Commission President Ursula von der Leyen. That brief pause wiped $180 billion off EU stock markets, froze German auto exports to America, and saw the Euro Stoxx 600 sink by 4.4% in just 3 trading sessions. In Seoul, the Korean government held emergency talks when a 25% tax on imported cars, effective April 3rd, put 49% of Hyundai and Kia exports at risk. South Korea's central bank is predicting a further 4% drop in auto exports to the United States in the third quarter, a slump that could jeopardize tens of thousands of jobs in Gwangju and Ulsan. And these waves of tariffs weren't just high, they were unpredictable. On May 28th, the U.S. Court of International Trade ruled that Trump had overstepped his authority under the IEPA, putting most of the new duties on hold. That emergency break threw businesses and investors into even deeper confusion. What happens if the injunction is lifted after weeks of appeals? Meanwhile, retail giants like Walmart were left scrambling. Walmart, which used to move 11,000 containers a day on a finely tuned just-in-time schedule, is now facing serious stock shortages, skyrocketing costs, and most alarming of all, a looming $25 billion second quarter loss. That's the starting point for the crisis we'll unpack next. The supply chain meltdown is more than a number on a balance sheet. It's hitting regular Americans where it hurts most, their wallets. Since Trump's 145% tariff on Chinese imports took effect, Asia to U.S. freight rates shot up from $3,500 to $6,500 per 40-foot container in just the first 3 weeks of May, nearly an 85% jump. Carriers warn that rates could hit $8,500 any day now. Freight companies also report a 20% increase in blank sailings, empty containers left sitting idle, and shipment delays of up to 2 weeks. The fatal blow has struck right at the heart of the just-in-time system. Walmart, the biggest U.S. container importer, has acknowledged that store shelves have been going empty for hours at a time as trucks sit idle, waiting for shipments to clear the ports. but the rising costs haven't stopped at sea. On land, a scramble to lease warehouse space before another wave of tariffs has pushed bonded warehouse rents up fourfold, and regular storage rates have jumped by 60% in just one quarter. Flex, often dubbed the Airbnb of warehouse rentals, says inquiries for bonded space have skyrocketed 6 times over, leading to a wait list. With 10 distribution centers paused to control losses, Walmart is now burning through millions of dollars each day in rent, utilities, and labor just to house idle containers, expenses that just-in-time supply chains had almost wiped out. The impact will hit supermarket checkout next. Economists across the country estimate these new tariffs will cost the average American household around $1,000 more per year. On the corporate side, CFO John David Rainey warns that retail prices will jump at the end of May and spike further into June. Picture a cut of beef that was $12 per pound now going for $14. A patio set from Guangdong? Add another $60. A $350 child car seat from Suzhou? Tack on a straightforward $100 tariff. Talking to CNBC, Rainey admitted Walmart's famous everyday low-price promise is on shaky ground. From containers stuck offshore to bare shelves at your local store, this tariff shock has shattered the just-in-time logistics that U.S. retail has relied on for decades. Even though the White House insists these duties will lower costs, tens of thousands of warehouse workers are benched, and American shoppers are paying more for staples like cereal. The path ahead for Walmart, and for working and middle-class wallets, looks rougher as shipping rates, storage fees, and retail prices climb every day. And then on the afternoon of May 28th, a leaked 12-page confidential memo from Walmart headquarters in Bentonville titled Project Triage sent shockwaves through Wall Street. Walmart will mothball 10 major distribution centers over the next 6 weeks, spanning from California to Florida. The list includes Riverside, California, Fontana, California, Brooksville, Florida, Winter Haven, Florida, Pageland, South Carolina, Sanger, Texas, Elwood, Illinois, Groveport, Ohio, Plainfield, Indiana, and Menominee, Wisconsin. Each of these sites is a key part of Walmart's supply chain. Massive fulfillment hubs over 800,000 square feet, all operating around the clock as part of Walmart's 151 million square foot logistics empire. Supply chain consultants at MWPVL say a typical Walmart regional center employs over 1,000 full-time workers, along with up to 1,500 seasonal staff at busy times. Multiply that across 10 facilities, and the People's Union USA estimates about 50,000 jobs will go dark, roughly 70% of them temp or agency roles, with layoffs starting June 30th. That announcement immediately set off a grassroots, 72-hour Don't Shop at Walmart boycott campaign launching this coming Monday. Unions weren't the only ones furious. Local governments jumped in as well. In DeKalb County, Georgia, where 2 Walmart supercenters had already shut earlier this year, Mayor Lynn Deutsch warned this would hit local paychecks even harder. Meanwhile, Brooksville, Florida's City Council, where DC number 630 provides nearly 9% of tax revenue, held an emergency meeting fearing a domino effect on some 200 nearby trucking companies clustered around Kettering Road Industrial Park. Nationally, the loss of 50,000 jobs fueled fierce debate just a week after Walmart announced 1,500 corporate layoffs as part of its own restructuring. Bipartisan lawmakers have called for a House Commerce Committee hearing, questioning why Walmart would close so much capacity just as the White House claims President Trump's new tariffs won't hurt Main Street. Even more serious, these shutdowns strike at the heart of Walmart's everyday low-price model. With about half of its warehouse capacity offline, Walmart must stretch its typical restocking cycle from 48 hours to as long as a full week. Stores in the Southeast have already been told to maximize their freezer capacity, since delays mean fresh foods may not arrive on time. Analysts fear that the just-in-time logistics Walmart once bragged about is on the brink of a collapse that could ripple across the whole retail industry. Meanwhile, on TikTok, the hashtag #EmptyAisles surged to 12 million views in just 24 hours. Users posted videos of bare shelves, tagging former President Trump with one burning question: can you end this tariff war before bread and milk become luxury items? Amid the cascading fallout, 50,000 families facing temporary unemployment and shattered supply chains, Walmart has become a political flashpoint. The nagging question remains: are these protectionist tariffs really bringing jobs back to America, or simply pushing tens of thousands of warehouse workers to the edge of unpaid leave? In Brooksville, Florida, Everbright Sewing, which once supplied 20,000 uniforms to Walmart each month, has put up a close due to order cancellation sign. The factory owner bluntly noted, "One phone call from Walmart's procurement team was enough to send us into bankruptcy." And this story is hardly unique. According to Reuters, by March, Walmart was already demanding Chinese suppliers, from cookware makers to apparel factories, cut prices by up to 10% with each new tariff round, forcing hundreds of small, razor-thin margin businesses into a slash-and-survive crisis. The fallout is harsh. The Hunar toy factory in Guangdong, which had been a Walmart contractor for 40 years, had to slash output by 70% after U.S. buyers canceled orders over a 145% tariff. Within 3 weeks, 130 of its 400 workers were laid off, and that's only the overseas impact. Back home, the U.S. Small Business Association's confidence index tumbled to 95.88 in April, well below its 51-year historical average, reflecting deep uncertainty as tariffs shift overnight and long-term contracts disappear. The next punch hit logistics. Rates for containers moving from China to the West Coast shot up from $3,500 to $6,500 per FEU, and analysts warned they could top $8,500 by mid-June as carriers cut sailings and overload vessels to dodge duties. On land, America's trucking industry saw a short-lived peak as customers rushed to import pre-tariff shipments before demand quickly cratered. DAT forecasts flat truckload volumes into 2025, and Knight-Swift's CEO admits there are no green shoots for third-quarter demand. With Walmart distribution centers shutting down, local carriers lost their steady routes, forcing drivers to return empty or face unpaid furloughs. The domino effect didn't stop there. Starved of cash flow, many small suppliers cut insurance, delayed payroll, and sought loan extensions. The NFIB now warns U.S. small business default rates could reach levels last seen during the 2008 financial crisis. The once seamless retail ecosystem surrounding Walmart's hubs is starting to fracture. Logistics firms, warehouses, even corner delis near Riverside's distribution yard report evaporated revenues. As one Wall Street analyst put it, when a warehouse locks its doors, every truck parked outside slowly turns to rust. And here's the scariest part. It's not just a few extra dollars for beef. The entire support chain, from cardboard factories to container yards, could collapse too, dragging tens of thousands of overlooked jobs into the abyss. If the White House keeps claiming that tariffs will revive domestic manufacturing without an escape plan for these vital links, the crash will be more than empty shelves. It'll leave entire industrial parks, once built to serve Walmart, in ruin. If this recent tariff shock forced Walmart to take a $25 billion hit, then its comeback plan, dubbed Project Reset, aims to rebuild its entire supply chain within 24 months. And, it begins with a quiet pivot away from China. According to Reuters, before President Trump's 145% tariffs hit, nearly 60% of Walmart's non-essential consumer goods came from China. By the end of the first quarter of 2025, that figure had fallen to about 48%, as the company rushed to sign new contracts with factories in Vietnam, India, and Cambodia. In Hanoi, a Ministry of Industry and Trade representative revealed Walmart will invest an extra $1.2 billion to grow its textiles and home goods lines in exchange for a U.S. tariff cut to 25% on made-in-Vietnam products. But that opening is far from assured. Just in April, the White House threatened to hike anti-dumping duties on Vietnam to 46% before temporarily delaying them for 90 days, forcing long-term contracts to be printed and shredded in a single week. And Walmart isn't putting all its eggs in one Asian basket. Its second big move? Pouring $5 billion into its Made in Heartland initiative to build 3 home goods and electronics plants across Arkansas, Ohio, and South Carolina. All that capital came from a $5 billion bond issuance in April 2025, just as interest rates remained low, per Reuters filings. And that sum is only a down payment on a much larger plan. Walmart has committed $350 billion over the next 10 years to focus on domestic production, farming, and assembly, all to slash its container transit time from 28 days to less than 1 week. The third move, and its secret weapon, leans into sci-fi. Walmart signed a $520 million extension with robotics company Symbotic to roll out a self-learning AI system across 400 order fulfillment centers. internally named Link 16, borrowing its name from the U.S. military's tactical data network. This platform scans real-time data, from shipping rates to weather, then matches them to tariff schedules, and pre-calculates 3 cost options so containers can reroute before penalty fees hit. Walmart's leadership believes Link 16 can save $600 million per year in delays and surcharges. If those savings hold, Walmart even plans to offer its AI-powered forecasting as a service to smaller competitors. Of course, all these bright hopes hang by a fragile thread tariff volatility. Every time the White House hints at adjusting duties up or down, Walmart's logistics network must pivot within 72 hours. A dizzying pace, even for a $680 billion empire. That means even though the $5 billion plan looks green on paper, Wall Street analysts warn that just one more tough tweet could send domestic manufacturing costs skyrocketing by billions, turning Walmart into an unwilling participant in an ongoing trade war. Will American consumers gain from a revived Made in USA push, or will they pay a few dollars extra for every toaster and fan? It all depends on whether President Trump will hit the brakes on this tariff tornado, or keep it spinning. Less than 6 weeks after the Liberation Day tariffs went into effect, the U.S. stock market has plummeted into a full-on sell-off. Right at the center of this storm is Walmart's share price. From April 2nd onward, the moment a basic 10% tax, plus a punishing 145% surcharge on Chinese imports, took effect, Walmart, ticker symbol WMT, has shed about 11% of its value, erasing nearly $37 billion in market cap over just 30 trading sessions. The drop was so steep that index funds had to scramble to rebalance their S&P 500 holdings, which only added more downward pressure. And that panic didn't stop there. It shot straight into the heart of logistics. On March 21st, FedEx slashed its full-year outlook and warned of extremely tough times ahead. FDX stock evaporated by 11% in one morning, its steepest one-day fall since the 2020 pandemic. It wasn't alone. The Dow Jones Transportation Index, tracking UPS, J.B. Hunt, and other carriers, has tumbled more than 17% since its November high as fears of a frozen supply chain grow. Even UPS, despite winning a big medical logistics contract, couldn't escape the fallout. Its shares fell 8% after announcing 20,000 layoffs and 73 facility closures, blaming shrinking Amazon volume and squeezed margins. Not even Prologis, Walmart's longtime warehouse partner, avoided the pain. When Walmart hinted at closing 10 distribution centers, PLLD fell 9.6% on April 3rd, its worst hit since March 2020, as investors worried about rising vacancy rates and dropping rents. A Bloomberg intelligence analyst called it the final nail in the coffin for anyone who thought logistics real estate was immune to trade wars. The chain reaction continued. Within 48 hours of Walmart's stock crash, investors pulled over $6 billion from retail and transportation ETFs, the biggest outflow since the 2008 financial crisis, according to Refinitiv data. Investment-grade BBB bond yields spiked 55 basis points, forcing Walmart to put its $5 billion debt issuance for the Maiden Heartland initiative on hold. Simultaneously, the VIX jumped above 26, flashing a clear fear signal. The message was loud and clear. If the White House doesn't dial back this tariff war soon, today's retail and logistics shock may only be the beginning of a far deeper rout, one where jobs disappear, investors lose cash, and consumer confidence craters. 3 weeks after Liberation Day tariffs took hold, Brussels warned that 380 billion euros, a staggering 70% of EU exports to the US, was under threat and vowed 95 billion euros in countermeasures unless Washington backs down by July 9th. The EU also reminded everyone that tariffs alone could never erase the $226 billion US trade deficit with Europe. In Ottawa, Prime Minister Mark Carney declared Canada would answer in kind, calling these tariffs a political debt that had to be paid. Mexico went further, warning that a new 25% duty could cost 400,000 American jobs, breaching the spirit of the USMCA. Markets immediately felt the impact. The EU Business Confidence Index hit a 3-year low. Canadian bond yields ticked up. Safe haven assets like gold and the Swiss franc surged as investors rushed for cover. The risk of a lose-lose outcome looks clearer by the day. The U.S. may gain some exports, but allies lose trust. And America could lose even more. Will President Trump back off to repair these fraying relationships? Or will he double down on tariffs, turning this into a drawn-out and painful standoff for everyone? And as rumors swirl that Walmart will close 10 distribution hubs and report a $25 billion loss, this isn't just an internal issue, it's a serious warning. Tariffs aren't just dry numbers, they can cut into the very arteries of global supply chains. When Reuters revealed that Walmart had been forced to hike prices across the board to cover Liberation Day tariffs, American shoppers paid an extra 2 to 3% every month on their grocery bills. If the White House clings to an America First plan with 145% duties on China and other partners, the effects will stretch well beyond retail. U.S. manufacturing could stall, layoffs could spike, and even the global financial system could wobble. Just as the IMF cautions that these tariffs risk shattering trade order and driving up financial tensions, the stakes couldn't be higher. The EU, Canada, and Mexico all demand new talks, not just for lost profits, but to repair shattered trust at the negotiating table. So the question remains, will President Trump ease these tariffs to save supply chains and his own reputation? Or will he ramp up this tariff war and drag the U.S. into a spiral of losses? Stay tuned for the next turning point, and don't forget to subscribe and ring the bell so you never miss our latest updates from us.